Good evening. This is an Elliott Wave alert update being recorded on Sunday, April the 6th at 4:30 p.m. Pacific Daylight Time. I'm making a quick update. The markets can open and they are sinking. And as you can see, the S&P is down 230 and heading again towards the lows rather than away from the lows. The NASDAQ is down 924. The Dow is down 1575. The Russell is off 90. I'll say 92, but it's been down more than 100. Of importance to say right now, there's where the market is. Watch that line go all the way across and see how close we are to that green box. We're sitting just above it, just above the green box. In fact, I think if I go to the low, we're still in the same place. We're very close to dropping into the green box. Remember, I was talking about in the weekly update, I was talking about if that were to occur, we're going to get a pretty strong signal. And I'm not actually calling it just yet because I want to do it off of the SPX. I need to do it off the cash market for obvious reasons. The futures can turn and race back, and then the cash doesn't open down as low. So, but right now, on a futures basis, what they're basically, if it stays like this, what the market is telling us, we're going. And what will happen is on our opening or when the options are tradable, then you're going to see a lot of activity in the puts again. And volatility is right now still sitting in a range, but the future is at 38. So we don't know. We'll get more data as the different markets begin to open right now on a futures basis. I'm thinking we're going to continue to go down. So any of the stabilizing factors that we're looking for are going to come from the options. So, we have to see how that's all going to play out right now. And if it's going to continue to be where the dealers are sitting there holding the bag, so to speak, then the answer is they sell into weakness. And if that occurs until they can get something different in place to change what's going on, and that's all going to come through trading, we continue to go down. So the stabilizing factor has not stepped in yet. And that's going to be this just like somebody comes in and the floor gets put down. As a trader, you'll know the floor is getting put down and you'll be able to count down in an Elliott basis, something that looks pretty clean. And then you're going to look for off of whatever level it is. If you're going to go down to a small time frame chart, you're going to start looking for 5 waves up, whether it's on a 15, a 2, or a 5, depends on the time frame you trade in. Now, other thing, day traders, you got to be careful on this one because the margin has doubled from what I understand. And so that puts a lot more pressure on your trade that may not allow you to trade. So again, if you're a position holder and you have options, well, I have no idea what's going to happen overnight. Again, the thought is at some point, technically, we're going to get somebody to come in and set a floor for a bounce. Now, granted, it's likely going to be a dead cat bounce, but still, we should have a bounce in here. That's going to provide opportunity to a lot. And we'll see how deep it goes and what it can trigger. So, but what we're looking for is we're looking volatility to kind of get crushed and for the puts to come down. So the volatility is in the puts, and that's what keeps pushing those prices, and it's all based on demand. So we're hoping that the demand caps and they start looking for a home to sell. And then people are just starting to get out to take whatever they can get. So there are things that's going to be trading. Now, right now, on an Elliott basis, if we open here and the cash opens here, I'm pretty much convinced, because let me tell you one other thing. Where the 200, this is the 5-year weekly 200 moving average is sitting at 47.73. The low thus far is 48.32. So, but we're close. And to get down and below that and to break it and continue to head lower, that could be a trigger, a long-term trigger. So that's another classification of like, oh, time to change those positions. And because it could go. Could we crash from here? Well, I'm going to think that we probably they're going to, you know what they'll declare? They're going to tell you that it's a bear market. And the S&P could open in that bear market. And again, primary, this is the primary degree fourth wave. What this would have to be completing here, if we're flipping to that view, this is primary 5, cycle 3. So what we're dropping in is the very beginning stages, of a cycle fourth wave. And what the cycle fourth wave would do is bring us back to here. But that's in its entirety. So if it gets down here in wave A, then I'm going to mostly think hopefully it'll be not necessarily 1, 2, 3, 4, 5, but that's what it's kind of looking like it's going to be. So what we're also determining now, if we're going to bump this up, is it coming down in a 5? Certainly feels that way. Which would suggest in this cycle, wave 4, if that is what's going to be in place, then that A wave, if it's 5, then the whole moves a zigzag and we're gone. Over the long term. So over the next several weeks, the next month, the next couple of months, I can't tell you how long things are going to last if this breaks loose. But I am feeling that technically there'll be the periods where somebody's coming in, a traded firm or whomever is coming in, they're setting up floor immediate, and everything kind of turns. All the algorithms turn and they go with. And so that's just to kind of go to that next thing that's kind of needed. And it's going to be done electronically. And it's going to be selling the puts, taking profit in those puts, buying calls, selling the underlying. And so there's a lot of things that can kind of go on. But in terms of the dealers are the ones that are kind of sitting there with the positions that would have to sell into weakness. So they will be looking to get to turn those things. So hopefully they will get those sellers, but it's got to come from taking volatility down. If you start to see volatility drop, then that is not necessarily a bad sign, which it kind of is a little bit here. But options need to open, and I don't think that comes until later. So this is going to be interesting. If it is indeed that, we're going to be looking into here. It's 1, 2, 3. Let me bring it all down. Let me bring down to the daily. Okay, this is the daily. It is pretty nasty. Initially, we got 47.65, 66 down to 47.60. That would be our next level. It's 1.618. That would be where wave 3 is 1.618 times the length of wave 1. Or, and I'd have to say wave 3, because this is still 1, 2, and we're looking for this third. So this whole C wave. So no, I got to run another one. Hang tight for 1 second. I'm giving those to the upside, and I've got to get rid of them because they're not actually going to come into play right now. So now we're looking from here. This is going to be gigantic. But I got 4.236, right? So you see them all? That's how severe we're dropping in this third wave. Our next marker is 45.141. So outside of what we have for the C wave, if we're just looking for this third wave, we've already blown through everything. So again, the necessity, you got to bump up to the next level, that there's a whole lot more that can drop. And guess what? We have as well circuit breakers. Right now, the S&P is down 4.25%. At 7%, the exchange halts trading. I believe that is also good during the Globex session because, in my mind, the exchange handling all these trades is the CME, Chicago Mercantile Exchange. So I would imagine they would be closed. So in any case, you got to be careful of that. Now, I'm actually talking to day traders. I'm talking to swing traders. People, they're going to get in there and trade it. You got to be aware of a lot of stuff. And so right now, here we are dropping. 47.65 is next. And because of how low we've already gotten, if they don't turn this and really start to pump it higher, and when I'm talking about, they got to get it successfully above 49, successfully back above 5,000. Then there's like, okay, now we can talk. Are we going to go higher? And somebody will come in and put a floor and they'll run it.
and change all these positions and open the door for the next decline. So I'm not thinking that this is over, but I'm just saying I think we should get some kind of a bounce in here. All right, that's the S&P. So again, if it turns and goes to the upside, you got your levels. Look at those the way it is. And you can run markers by thinking if it's just a small 4, you're going to take it from the top of 2 down to wherever this 3 comes in. And we still need a 4 and a 5 before we're up to, well, this minute. Wow, minute, yeah, that's a lot. You got to think this comes in a little bit, and then we get that 4th wave somewhere down in here. And then you take it from the top of 2 to wherever this bottoms. That gives you your fibs on the way back up. If it does not come back up by the time the SPX opens, then this has to be changed. I mean, if it's lower, it would need to be changed. I won't do it until after the close, so I get the full picture. This is the 4-hour. It's looking pretty sick. Let me just go straight down to the 15-minute. Yeah, it is not. You can see the intensity and the buying. It's there, but it's all technical. What you need to do at this level, what's your gamma, what's your delta, and that's what they're doing because the options aren't trading. All right, let's go over and take a look at the NASDAQ. I'm sorry, I'm really going on here, aren't I? All right, so in the NASDAQ, let me go out again to that 5-year being. There it is. There's the trade. Look at that. See that? I'm wiggling. In fact, I could change the color, but see that, find it. There it is. We're in the green box. It's pretty strong that this is likely going to get bumped. And how it got up here, I'll figure it out. Like, really, I can get the 3 and the 4. I just got to work the primary 5 out here. And a lot of that change is going to come in all of this mess. That what we thought it was is going to be something different because it has to be more inside to build up to that primary 5th wave. So wave 3's got to be coming down here, probably here, and intermediate 4 is going to be there. And this is intermediate wave 5 to put in primary 5. So really it's just recounting from here. This, moving that 3 down, and it's 1, 2, 3, 4, 5. So it's just dropping everything a degree to raise this 2 degrees. So this goes down to, or this gets bumped up. So this is intermediate 3. And this becomes minor 5, etc. And everything comes down. 3 goes here, the 4 goes there. And this 3 goes, yes, this 3 goes here. And the 4 goes here. And the rest is history, as we say. This would be a 5. So this goes up 2 degrees, and the others go down. So or this gets bumped up at 1 degree. Here we're going from primary to cycle. And here we're just going up to get to that primary 5. So, etc. All right, so what are we doing? We're dropping pretty seriously in the same deal. I'm on that 5-year weekly chart, okay? And we're down, getting ready to break below the NASDAQ weekly, 5-year weekly 200. That level is, let me just move that, 16,283. We have been as low as 16, come on, don't do it. Tell me what you are. 16,460. So we're pretty close. We're pretty close. The way the NASDAQ goes, it wouldn't take much. And below that, we have some additional support at 15,967. And we've got a little bit of a cluster here that if it held, it's still going to be serious because it's just a bounce. So that's at this point, if I bump this up, all I'm looking for now is just places where we get a bounce. And that's an opportunity for traders to change positions, for traders to do what they need to do. But you'll find these points where you can get it done. If you're a day trader, there's going to be a lot.
There's going to be a lot to do and a lot to make. If you're a swing trader, there's still going to be a lot, because if you're in there doing your trades and providing a market for somebody else trying to do something bigger, God bless you. So that's kind of like scalpers. We go in and we're just doing our trades, but in that moment, it might facilitate somebody else's bigger trade. So that helps. All right. So, but in any case, where can we get to? All right, this is the big picture. And again, initially, I would likely run these. These are not going to function anymore. That's like calling still and getting this 4. And if I'm taking this up a degree, yeah, it's still going to be the same, but it's not. So because I have greater distances to cover. So if I'm going to go, I'd have to wrap some. In all honesty, I've got to let it go down to there because we're in an intermediate degree and I still have to do this against the cash market. So I'm going to leave things the way they are. So what we have is 16,644. We've gone through it. It's still there, might provide some resistance on the way back up. Outside of that, coming off, we have that support from the weekly, the 5-year weekly 200 at 15,967. A break there could be a trigger point. And that could drop us quickly to 15,381 before we get a little breath. And then we have additional larger fib support at 15,253. These are levels that, again, would be bumped up. But right now we're leaving them on the intermediate degree. If the market is going to hold before it breaks that level, because on the degree, that's the level it would need to break to invalidate the trade. But in all honesty, we're into this box, which tells me we're moving, we're getting out. So what I'm looking for, again, overnight, if it finds its floor and can start to trade up, we could get that dead cat bounce. That's an opportunity. It's opportunity for traders to do what they need to do. And the bigger the trader, the more time they'll need. And they'll be, hopefully grateful because there's going to be enough trade. I think there are several more rounds to the downside as well as by breaking these things, but I'm looking for just a break in it, and I'm going to show you why. If I take this down and I put it on the 4-hour chart, here's the deal. The deal is that we've got 1, 2, and I'm looking for this third. Obviously, it's not done yet because we haven't gotten any 4. So this comes off. This is not done. So, oops. This, actually, I just want to activate and put it down here. But now we want to bring this in a little bit because we need to take a look to see where our other, this would be for the C wave, not any good. 100's gone. So we're just going to get that out of the way. You got 1.618 and then 2.618. 1.618 is down at 15,381. Remember I talked about 15,000 being a pretty, has to be a strong point if we're going to try to see a dead cat bounce from these levels. Otherwise, we drop more before. That's kind of my point as well. We may continue to drop, but we should get a little bit of a respite, a little bit of a break where it kind of pumps itself up. And that's what I'm calling a dead cat bounce. It's going to provide trades and it's going to provide points where if you are a swing trader, whatever trader, you might find that a period where you can make some adjustments to maybe your own positions. So again, our support coming off, we've got the minor. This would have been for this, which has to be jacked up to the minute degree. Give me 1 second. I got to change that to minute, change this so that we know when I'm working that these are minute degree and these are minute degree. And we're looking for the bottom of the third. And 2.618 comes in at 15,967. That would be as good as any. If we move it and it holds, plus or minus, give it 10, 15, I guess, plus or minus, and then we'll consider it that it's holding, but it's got to turn. It's got to be bought back up. And basically get back above 16,000 pretty quickly if it gets down there. All right. So, and if it continues to break, folks, here's your next levels. Now let me open this back up, put it back out in the daily, see if I can add some more. So again, I need the 4.
So I need a bounce of some kind to anchor where resistance is. And right now I don't have it. So all I can give you is that, and then on the way back up is 16,644. Within it, I can come down to the 1 hour chart, not that one, that one. And you can see we're not really getting any breaks. We have a little one there. Wow. So if we're going from here, it's kind of like 1, 2, 1, 2, 3, little 4, 5, a 3, a bigger 4, 5, a 3, a bigger 4, and 3, I think. Because you see it's all subdividing. So you just have to be able to count it through. But it might be a bit like a chop, but just with lower lows. Higher highs, lower lows until we reach that support. That could be it. And then we get a bounce. And then your bounce, you're going to take it from that level to wherever this bottoms. And that's just going to give you your retracements for a bounce. And then if you get like 382 to 50%, that's it. That's what you're looking for. Looking for that. If it goes 100%, I'm not looking for down here. I think there's still going to be some downside pressure on this. So be prepared. All right, I'm going to finish this and get it out because I don't want to be talking. I want to be trading. Oh, by the way, just to kind of toss this out there, I still do have that, what is it? Live stream. And send me an email, michael@mjf1partners.com if you want more information, or go to logicalsignals.com and it's on there. And because this is going out to everybody, if you want the live stream, go to logicalsignals.com, look under live stream. It's cost $99. See you in the morning.